So you've got this huge world of commodities, right? How in the world do you find the one that's about to make a big move? Well, today we're going to break down an ICT technique that uses one single market to spot institutional footprints and pinpoint the true leaders and laggards. Let's get right into it. Hey everyone, and welcome to AI Explains ICT. This video is all about core content month 10, episode 2. Now, this is a pretty powerful strategy we're going to cover with a lot of detail, so you'll definitely want to grab something to take notes with. Ready? Let's get started. So, here's what we've got on deck. First up, we're going to tackle the commodity conundrum. Then, we'll get to the secret sauce, the one index that pretty much rules everything. After that, we'll show you how to spot the smart money, and we'll look at some real-world examples to see it all in action. And finally, we'll wrap it all up with a clear takeaway for your own trading. All right, so let's start with the big problem, right? The commodity conundrum. The thing is, the market is just huge. You've got so many options, and it can feel totally overwhelming. How do you know where to even start looking for the best opportunities? You know, the whole commodity universe is basically split into two big camps. You've got the agriculturals over here. Think greens, livestock, cotton. And then on the other side, you've got the financials. That's your currencies, metals, crude oil, the whole 9 yards. With all these choices, how do you find the one that's actually primed and ready to move? Okay, so how do we solve this? Well, according to ICT, the answer starts with just one single market. Seriously, this is the key that's going to unlock the entire commodity puzzle for you. And here it is, the US dollar index. You got to think of it like the king on the chessboard. What the dollar does, it sets the tone for pretty much everything else, especially when we're talking commodities. So forget everything else for a second. Your analysis has to start right here with the dollar. And the relationship is actually pretty simple. It's an inverse one. It works like this. When the dollar index goes up, it puts this downward pressure on commodities, right? It pushes their prices down. But when the dollar index falls, it creates the perfect environment for commodity prices to start climbing. So here's the bottom line. Your long-term view on any commodity is directly tied to your analysis of the dollar. It's that important. Okay, so we know we need to watch the dollar. But that still leaves the question, which specific commodity do we trade? Because they're not all going to move together. And this is where we learn how to follow the footprints of the big institutions using something called relative strength analysis. This right here, this is the absolute heart of the technique. We're on the hunt for something called a failure swing. You can also think of it as an SMT, or smart money technique divergence. Let me paint a picture for you. Imagine the dollar index is rallying hard, and it makes a new higher high. Now, logic tells us that commodities should be tanking, making new lower lows, right? But what if you find one commodity that doesn't? What if it just holds its ground and fails to make that new low? That, my friends, is a massive flashing signal. It's telling you that the big players, the institutions, are quietly buying it up. They're accumulating, and that's what's stopping it from falling. And this is a perfect way to see the difference between a leader and a follower. Look over on the left. That's the signature of a true leader. It's refusing to make that lower low, which shows you there's real institutional strength under the surface. So when the dollar finally does turn around, this is the market that's going to explode higher with the most force. Now on the right, you've got a follower. Yeah, it rallies, but it's really just tagging along, riding the coattails of the leader. It's a much weaker move. And our whole goal here is to find and trade the leader, not the follower. And guess what? The exact same logic works perfectly in reverse when you're looking for something to short. Let's say you think the dollar index is about to fall, which should be good for commodities, but you notice one particular commodity that just can't seem to make a higher high like the others. That little bit of weakness, that failure to rally, that's your signal. It's a sign of institutional distribution. They're selling, and that means it's the leader to the downside. All right, theory is great, but let's see how this actually plays out in the real world. We're going to jump in the time machine and look at the period from mid-2016 to mid-2017. Why this period? Because from the summer of 16 to January 17, the dollar was on a tear. It was super strong. But then, after January 17, it got much weaker. This gives us the perfect before and after scenario to hunt for these leaders. Okay, so check this out. We're comparing two grains here. As the dollar was pushing to higher highs into the end of 2016, take a look at wheat over on the right. See how weak it is, just constantly grinding down, making new lower lows? But now, look at soybeans on the left. It's a completely different story. It absolutely refused to go lower. In fact, it started putting in a series of higher lows. That is the failure swing in action. And that was the crystal clear signal that soybeans were being accumulated and were the true leader in the grains group.
And feeder cattle? Wow, this is just a textbook example of a leadership market. While the dollar was just ripping higher through the end of 2016, feeder cattle was basically just going sideways. It refused to drop. That pattern, that constant failure to go lower, combined with the fact that it kept breaking little short-term highs, that was a dead giveaway of massive institutional buying. And just look at the explosive rally that happened once the dollar finally rolled over.
Now, this is a really important one, a counterexample. Here's cocoa. So in early 2017, the dollar starts to fall, right? That should be good news for commodities. But look what cocoa does. It just keeps on dropping. This proves one of the most critical points of this whole thing. A weak dollar does not lift all boats. You can't just blindly buy commodities when the dollar is weak. You have to do this individual analysis to find the laggards like cocoa and stay away from them, just as much as you're trying to find the leaders to buy. And don't think this is just for corn and cows. This analysis works just as well for financial commodities. Take a look at the Japanese yen here. Right as the dollar index was making its final higher high in January 2017, the yen put in a higher low. That classic failure swing was the signal. It told you the yen was a leader among the currencies and was being scooped up for a big move higher. Okay, so we've seen the theory, we've seen the examples. How do we actually put all this together into a framework we can use? Let's break it all down into a simple checklist you can apply in your own analysis. All right, here are the fingerprints you're looking for, the signs of institutional buying. Number 1, the big one, that key failure swing we've been talking about. The commodity fails to make a lower low when the dollar index makes a higher high. Number 2, you want to see that the market has zero trouble breaking through recent short-term highs. It just slices right through them. Third, whenever it does pull back, price finds support at key discount levels. We're talking about things like bullish order blocks, which are basically those last down-close candles right before a big up move. And finally, the price action itself. The up move should feel powerful, energetic, and they should cover a lot more ground than any of the little down moves. When you start seeing all these signs line up, you've likely found yourself a leader. And this is why this framework is so powerful. When you go back and apply this analysis to that 2016-2017 period, all the noise just disappears, and the real leaders become so obvious. In the agricultural space, soybeans, the entire livestock complex, and cotton were the clear winners. And in financials, you had a bunch of currencies like the Aussie and the yen, plus metals and crude oil. This scorecard isn't just some random list. It's the direct result of a process that filters out everything except for pure institutional strength. And there you have it, a breakdown of relative strength analysis using ICT's perspective. It's a really powerful way to cut through all the noise and see where the smart money is actually flowing. If you found this video helpful, do me a favor and hit that like button and subscribe to the channel. If you've got any questions at all, drop them in the comments below and a human will definitely get back to you. Until next time, safe trading.